The market continued its sell-off with the SPY down 2.38% on the day, closing at 513.88. The morning started out negative with the gap down and just continued lower. The only sign of positivity we saw was in the last 30 minutes, bouncing off of the 510 level. The largest gamma exposure concentration is now sitting at the 500 strike. This is something we wanted to see coming into the market today after the monthly OPEX last Thursday. And we basically wanted to analyze what market participants would be doing coming in first thing Monday morning in the new OPEX cycle. The gamma exposure data, which you can see highlighted by our purple bars, is still extremely negatively skewed and even more to the downside than we saw last week. And we actually had some downside market exposure using the SPY. Back on April 14th, we put on a 525-500 put debit spread on the SPY expiring on April 30th. We actually closed that out today for $852 in our Geek portfolio. That represented over a 200% return in less than 10 days. And if we just take a look at the chart that we posted, we had initially entered on this bounce here as the market rallied off of the lows. We thought there is a potential for another retracement, at least back down into this lower dealer cluster zone. We didn't think it was going to happen quite this fast, and so after the move this morning, we decided to take that off the table and lock in those gains. So let's zoom out on our chart just a little bit and see where we stand in the grand scheme of things. The big low was hit back on April 7th, and we had a pretty significant bounce off of that low, going from around the 485 level all the way up to 540 at the beginning of last week. We've since rejected off of that level, and one of the keys that I want to highlight here is we've got our anchored VWAP, which is currently sitting at 518.64. We're anchoring that to this April 7th low. This is one of the intraday indicators that we're using in conjunction with gamma exposure data, and we broke below that indicator today, and so intraday was looking pretty nasty right off of this opening bell drawdown, and we saw further bearish momentum throughout the day below that volume weighted average price. So we're going to keep the anchor here to this April 7th low until it is broken, and then we'll reassess. But for now, as long as we remain in negative gamma exposure territory with the largest GEX at 500 and below this anchored VWAP at 518.64, bearish momentum is going to continue. So we're watching these key levels closely. We're discussing these in our community Discord throughout the trading session. There's a link in the description below if you guys want to check that out and see what we're talking about. So come on in and say hi. Another key that we pointed out in last night's video is the support that is formed here between 490 and 500. This is off of that double bottom that we saw April 7th and I believe it was April 9th. Those two lows have created a support, and it's no coincidence that we've seen the largest gamma exposure concentration shifting now to that level as we are approaching to retest those lows. So this is going to be a key area. It's our lower dealer cluster zone. As I mentioned in last night's video, this is an area where a lot of market participants are net long puts at this 500 strike and below. And so this is coming into focus as we reach that area. It's likely that market participants will close out those puts, forcing dealers who have sold those puts to buy back shares of the underlying security, which they're using to hedge those short puts. And so that has a ripple effect, which could potentially lead to a bounce higher. The key factor in this, though, is whether or not market participants are going to go further down the options chain, buying heavy puts at lower strikes. So that's something we're going to be watching for. We didn't see that happening today. And so from an options market perspective, we're not seeing the additional volume coming in at lower strikes below the 500 strike, at least on the SPY. Again, we're monitoring this in real time, and we'll try to let you guys know what we're seeing in our YouTube videos as well. Next, let's take a look at the Qs. The Qs trading at 433.11, down 2.47%. The largest gamma exposure is at the 420 strike, and this 390 strike is also seeing continued negative gamma exposure at this level as well. So the skew in the Qs is much more negative than what we're seeing on the SPY. We've seen quite a bit of interest maintaining below the 400 strike on the Qs. That's something we've been paying close attention to. We've not been seeing that on the SPY, and so I think it's interesting that market participants are basically signaling that mega cap tech, as proxied by the Qs, still has further potential downside to go. So that's something we want to continue monitoring very closely. We didn't see much volume coming in down here today, however, but a break below these lows around the 410 level is going to have us very concerned for a potential move down to this 390 strike. Next, let's take a look at a few of the big dogs in the market, starting with Apple. Apple trading at 193.16 as of the close, down 1.94% today. So hanging in there better than the rest of the market. In terms of the lows, Apple hitting 170 back on April 7th, and the last several trading sessions have not seen as significant of a dip as the rest of the market. We are still sitting over 13% above the lows here on Apple. So Apple kind of bucking the trend versus the rest of the market, although we are seeing strong negative gamma exposure between 180 and 190. Most of the volume is at 190 and above. So there is an argument to be made that market participants are not going as bearish on Apple. Let's see if that's also the case for some of the other mega cap stocks that we've been watching as well. Taking a look at Nvidia dipping again below 100, sitting at 96.91, down 4.51% today. So got hit pretty hard, closer to its lows than Apple. However, most of the negative gamma exposure is concentrated between this 90 and 100 strike. So this is an area, as we've highlighted a number of times, this is an area where we've seen bounces previously on Nvidia, and this could be a potential bounce zone that we're seeing again. We're not seeing tremendous gamma exposure building below the 90 strike, so there is an argument to be made similarly to Apple that Nvidia could also be sitting on potential support here between 90 and 100. Next, let's take a look at Microsoft, another big dog at 359.12, down 2.35% today. Microsoft is much closer to its lows than Apple or even Nvidia. We've got the largest negative gamma concentration at the 350 strike, so we're very near to that price already. There's no major negative gamma exposure concentrations on a net basis below 340. We're seeing a similar distribution to the upside as well, so an argument could be made that the skew is now shifting back up. All the volume that came in today in Microsoft was between 350 and 400. So again, we could make an argument that there is support here slightly below these levels for three of the big dog stocks that we're watching: Microsoft, Apple, and Nvidia. This is an overarching general idea we've been discussing in our live streams, which are available to our members during the trading session. We've been discussing option strategies that are more speculative in nature in some mega cap plays like Nvidia, Microsoft. The idea being that buying an out of the money call debit spread, for example, on a name like Microsoft, potentially buying the 380 to 400 strikes in the May 16th expiration, could be a relatively inexpensive way to take some risk. Again, this is going to be a more speculative play, knowing that this position could go to zero, but if it works out, you could have a 4 to 5x type of return. And the idea being is to play off of all of this volume that is coming in and the gamma exposure that is beginning to build at higher strikes. So if support is forming here down in this level, even if we saw some further downside, a bounce over the next few weeks back up into this 380, 390, 400 zone could provide some really decent profits for a relatively low risk reward type of play. So we're looking at adding a number of plays like this to our portfolio and simultaneously reinitiating hedges. As I mentioned earlier, we did close out one of our hedges in our Geek portfolio. We locked in profits today near the lows of the day, and we're going to look to reinitiate a hedge in case the market does take another leg lower. With volatility this high, we want exposure to both the upside and the downside, and with the options market, you can structure a portfolio that allows you to do that. And so if you guys want access to our gamma exposure dashboard, our algorithmic trading strategies, as well as our daily live stream during market hours, head on over to geeksoffinance.com. You can sign up and become a member. We are running a special promotion, $300 off our yearly portfolio manager tier subscription. Use code EASTER2025 at checkout. We've got a few spots remaining, but this promotion is ending soon, so take advantage of it while you can. Again, members get access to our premium channels in our community Discord. You can see all the trades we're making in our own portfolio in real time, as well as share ideas with other great traders and investors that are in our community every single day. You can check that out for free, link in the description below. Thanks so much everybody for watching, and we'll see you guys in the next video.